up. Okay, your okay. Try this. Okay, try this code. Okay, crash plus one. Crash plus one. Okay, crash plus one. You all get the slides first, and I'll start my talk. Okay, crash plus one. So basically, the title of my talk today is market crashing. What should we do? Market crashing. What should we do? For those people on YouTube, I will load up the YouTube's a lot of slides in the YouTube comments. Okay. Yes, I hope that you all will find it useful. Okay. Crash plus one. I'll start talking when you're after you all start downloading the slides. Okay. So a lot of people wrote to me asking me, wow, market going down now, can buy, cannot buy. You know what, if I buy and then suddenly they catch a falling knife. You know, falling knife, going to catch it, your hand cannot cut, right? Well, you fall until you die. You know, a lot of people lost money and things like that. I'll give you some strategies on how to handle. Okay, I won't tell you can buy, cannot buy, or whatsoever, the kind of thing, right? Okay, but I'll give you some strategies how to handle. Okay, yes, crash plus one, crash plus one. Maybe I should call it correction plus one, but anyway, this is just the name for the slides. Okay, because it technically haven't reached a stage of a crash yet, but you know, it's good to dramatize something. Okay, I do look very slim in this phone. Okay, that's why I stay this slim forever. So yes. Okay, do you all just came in, or most of you have attended my earlier talk? Okay, at 8:30, at 8 o'clock. Yeah, 8 o'clock. Yes. Anybody attended my talk just now? Okay, my talk is on how to slim down. Yes, Chiling, I know you're always there. Thank you. Okay. You refer STR counters. I refer generally. It's a strategy, a general strategy for investment. Okay, a general strategy for investment. Yes, Kawai, thank you. Amy, thank you. Okay. So I hope you find useful. Oh, Kenny, you're still here, my good friend, man. Yeah. Wow. Okay, Gigi, Chailin, you know. Yes, Soplai, yes. Okay, Shelly, yes. Yes, Xiu Qing, yes. Okay. I will make your time. I respect your time. I will make your time valuable with me. Okay. Has been here since just now. Thank you. Okay. Lani, thank you. Has been here since 8 p.m. With me is with 1M65 and Premium Mob, I'll make sure your time is not just buy. Okay, I'll make sure your time spent, okay, has, you know, different kind of experience. Okay, yes. All right. Attended Slim Lapis. So called Slim Lapis. That's fine. I missed the talk just now about weight management for hubby. Alamak. Okay. Okay, I'll try to keep it, and you try to watch it since 8 p.m. Wow, you guys spend so many hours with us. I'm really really honored, you know, when people spend so much time with us. You commit your time to me, I will make it count for you. Okay, cool. All right. Okay, yes. Okay, all right. I think that you guys have the slides already. Maybe I can start talking. Okay, right. Okay, so the Thai, so just now was talk 121. Now it's talk 122. Okay, really, no kidding you, 122 talks already. Yep. So the title of my talk today is market is crashing. What should we do? Okay, what should we do? Now maybe I over exaggerated that. It's not really crashing, huh? Okay. Yeah, I'll talk about the different definitions. So again, disclaimer: this set of slides and my talk right now, okay, is meant for education, entertainment, and not meant to be advice for you to buy or sell. Okay, cool. All right, good. Okay. So the first thing first, the market really has corrected big time. Okay, about close to 10 to 15%. Okay, the S&P 500, which I think is on top, has declined by almost 9% from the peak. Okay, and the Nasdaq has corrected by almost 15%. Okay, and those people, now I'm talking about the index. For those people who always refuse to listen to me and love to buy and pick individual stocks. Some of the tech stocks really lao sai, you know, really lao sai. It's really hemorrhaging blood. It's blood and gore and all this, okay? It's very huge drop, okay? Now, I don't feel, I don't feel that bad because I generally buy the index, but I do a leverage index, so I feel the pain as well, you know? Easily last, I haven't counted yet. My guess is maybe $500,000 gone or something like that, okay? Yes, but, and you guys ask myself, am I so cool? I'm still very excited, right? You see me very excited yesterday selling. I was very excited to be given a chance to sell Bermudas, okay? I was jumping and happy. Do I look sad to you? Yes, okay? And I was, today, maybe yesterday got chocolate high, yes. Today I was so excited talking about weight loss to you, right? So do I look like I'm emotionally affected? And I'll share with you the strategy behind all this, okay? So the market has corrected. I use the term correction, okay? Corrected, okay? Corrected. And I think it is very important for us to know the definition, okay? The definition of different types of tiers of market movements, okay? Now, everybody will enjoy going up, okay? I don't recall in a bull market going up, there are different classification, like chonging, super chong, rocketing, you know, don't have this kind of classification. But in a bear market, when it's coming down, there are different classification, okay? The first of all, if you go to the slides, you will see, okay? Between 5 to 9%, we call it pullback. There are different terms for it. Some people call it pullback, okay? Some call it dip, whatsoever. But generally 5 to 9%, no big deal, not that big a deal. 5 to 9%. But when you enter 10 to 19%, generally people call that a correction. And the market technically, especially for the NASDAQ, has entered a correction phase already. A correction. A correction is really painful. Okay? A correction is really painful. Okay? And when you go to a bear market, which is 20% or more, that's what I call outside already. Okay? Yes. A bear market can dip really bad. Okay? In 2008, I think the market crashed by 60%. 2020, during the COVID crisis, it went down by 30%. So those are called crashes. Okay, those are called crashes, bear market crashes. Now, technically, what we haven't reached yet is a crash. So I think we want to, at this juncture, okay, know that this is between a dip and a correction, depending on which market you are looking at. Okay, yeah. I will answer some of these questions later. There will be a lot of Q&A. I'll happy to answer it, okay? Now, this definition is important because by categorizing them, you know how serious it is. It's just like in COVID, there is what color code are there in COVID?
What?
In COVID, there are certain different color codes.
Green, yellow, orange, red.
Green, orange, red, right? So similarly, in stock market, bear market, we're now in between a dip and a correction phase, okay? But this turbulence, we already predicted it. 1st of January in Singapore, I gave a talk, remember? Okay? I gave a talk and I said that there will be stock market turbulence, for sure. Stock market turbulence. What I didn't know, it come a few days later only. But at that point in time, market was still quite okay. But straight after that, now boom, 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 big time turbulence. I already predicted it in the slides. If for those people that missed the video is in YouTube, okay? My prediction for 2022. I predicted quite a few things, by the way. 2022, and one of them which I predicted was a huge market turbulence, okay? And I said that huge market turbulence will come, okay? And it came. It came pretty fast and furious. Okay, Rachel, you can ask the question later. I'll answer your question, okay? So, why did it happen? And as I explained before, there is a huge inflationary pressure. The inflationary pressure is caused by a combination of huge excessive demand, okay, and a lot of supply chain blockages. So supply cannot meet demand, price shoot up, inflationary pressure, and the only way the Fed can fight it is to increase interest rate, and they line up 3 to 4 interest rate. Increase in interest rate is very bad for stock market, okay? Because a lot of the tech stock, a lot of those stocks that are predicting income in the future right now, okay, those kind of streams of income are valued a lot less. So therefore, the stock price crash tremendously for a lot of the tech stocks. Okay, let's take a look at some of the tech stocks. Okay, this is a little bit small. Okay, a little bit small. I will wait. Let me maybe too bright. Okay, this is a little bit small. I'll give you a few of this counter and I'll describe to you. Okay, they're all in the slides. I don't know what's walk plus one. Everybody just I don't know what's walk plus one.
Your walk is your walking link.
Yeah, your walking link.
Oh, walking link.
Yeah.
Oh, okay. Sorry. Yeah, that's walking link. Sorry. Okay. Crash plus one. Okay. Yes. So just to give you a feel, Alibaba has gone down by 40%. Yeah, Alibaba has gone down by 40%, and that's largely not just due to this crash, but also the policy risk. Okay. Shopee, the parent company is called SEA. Okay, C has gone down by 48%, half price already. Yeah, Shopee is sponsoring all your 5% discount. Telling you right now, your 5% discount is gonna go vaporized. They used to give 7, right? Now cut down to 5. Soon it will become kosong. Because the share price crash like crazy. Yeah. Okay. You won't get there anymore already soon. Okay. So you better. Okay. Anyway, that's So by the way, hey, hello. Can you please click more like, so that people can watch this? My breath will be wasted. And those people who are watching on YouTube, these 60 people watching YouTube, can you hit a like on my video, please? Okay. It will help to promote the video. Yes. Okay, thank you, ladies and gentlemen. Okay, PayPal has went down by 47%. Alphabet, which is Google, has went down by quite a lot of percent as well. Shopify has gone down by 46%. Bitcoin has reached a high of $60,000. Now it's at 30 something, about half price. So can you see now? I already told you Nasdaq has gone down by about 15%. But if you look into individual stocks, a lot of them has half price, Half price is very lay long, Lay long, is that kind of thing. But some of you all say, well, if I buy now, catch a falling knife, see, right? Okay. So technically, for many of the stocks, is already a crash, It's a crash, okay? So a lot of people ask, Mr. Lu can buy, or Mr. Lu, I hold a lot of shares, what do I do, right? Okay, so question really is, okay, what if I buy and it crashes further? Okay, what if it crashes further? Would it be like catching a falling knife? Have anybody caught a falling knife before? You buy and then it crash, buy and crash. It feels terrible, man. It feels terrible. Unless your heart is made of steel. Okay? Unless the heart is made of steel. It's very painful to catch a falling knife. Okay? So, yep. So far, I've only described to you the phenomena. Okay? Now I talk about specifically, I'm going to break up market risk into 2 types. Okay? The first type of market risk, okay, there are 2 types of risk. It's very important for you to tell, when I want to catch a falling knife, what kind of risk are you talking about? What kind of knife are you talking about? There are 2 types of market risk, 2 types of risk in stock market. Number 1 is price volatility. Number 2 is irreversible price crash. One more time. Price volatility versus irreversible price crash. Okay? Now, let's talk about price volatility first. Price volatility means you know, sometimes it's like you know, just mood swing. No, you may have some friends, okay, who have this mood swing. You know, wow, some bosses especially, wow, more today happy, tomorrow upset, tomorrow happy, tomorrow upset, and things like that. Some personality are that. Just mood swing. Wow, up down down. Today happy, tomorrow sad. It's in Hokkien we say it's sangoji si lak. You heard before or not? 135 happy, 246 unhappy. It's sangoji si lak. Stock price can be like that also. Okay, I'm in a room with all women. I was about to say something sexist, but I just realized our audience is ladies, so I better shut up. But I'm trying to say that, have you experienced mood swing before? Stock market is like that. Yeah, phenomenal mood swing. Phenomenal mood swing. Okay, please forgive me. Okay, phenomenal mood swing. And this mood swing, chinchalat, chinchalat. This mood swing, chinchalat, This volatility, have you ever on the receiving of this mood swing, especially bosses? Anyone got bosses mood swing? How do you feel? If you have kena this kind of mood swing before, say yes. Kena this kind of recipient, this kind of mood swing before. I'm not saying your own mood swing, okay? I'm talking about recipient of bosses or mood swing. I ask this question because there's relevance to this. Anyone have kena this kind of mood swing, recipient of this mood swing before from a boss? I say yes. Yeah, see, yes, yeah. Okay. I had I'm not saying all lady boss like that. I had a lady boss with terrible mood swing. What jalat, man. One day love you like crazy, next day slap you like crazy, that kind. Yeah, like weather sudden change. Yes. Okay. Some men also like that. Don't say women. Okay. Yeah. Okay, my boss always nice to me. You're lucky, man. Yeah. So the volatility of stocks, okay, can cost you worse. The impact is worse than a boss who has mood swing on you. The impact is very painful. Yeah, men can also be like that. It's very painful. So don't underestimate volatility. So a lot of people say, Mr. Lu say it's okay, over time S&P 500 go up, Nasdaq go up, but the up down. I tell you, your boss, okay, got mood swing on you. But you don't worry, end of the month, every year, end of the month, you surely get a pay. End of the year, you also get a bonus and pay rise. But every day you gotta kena this thing. You can take it or not. That is the analogy of price volatility. The analogy good, right? Okay. You say it's okay, I can handle it because at the end of the month I get my pay, and at the end of the year I get my bonus and wife also. Okay. And end of the month I get my pay, and end of the year I get my pay rise and bonus. But you got to live every day like that. You know how to take it. Walao is like after give a kiss, give you a kiss. The stock market can be like that. It's very unbearable, okay? Yeah, right, Perlin, learn the robot first, but learn the robot got skill. Generally speaking, okay? Generally speaking, some stocks price volatility are quite little, but indices, index, I talk about S&P 500, Nasdaq and all this, although it's very volatile, but it's not lethal. Okay, there are some bosses. I use these bosses because it's a great analogy. Some bosses mood swing like crazy, love you, slap you, but they're harmless because end of the month they still give you a pay. End of the year they still give you good bonus. When time comes, give you a promotion. Indices are good, broad-based indices are like that. Okay, they are like that. Okay. You will feel terrible, but end of the month, end of the period, 10, 20, 30 years, you're like that. Okay, so therefore, the skill to handle this volatility, okay, right, is to ignore the volatility, right? When you kena upsetting boss with mood swing, right, what you do? Anybody? Okay, my example is very good, yes. When you kena this boss volatility, right, very simple lah. 1 year in, 1 year out lah. Even better, no year in, no year out. Okay? You score, you just... Then after that, next day she'll love you already. It's okay. So stock market is like that. You know that it's going to be like that, right? Ignore, heck care, just go and live on. Buy the market see, just go on with your life. It's exactly the same. Yeah, Lewis, yeah, just know, you see and how, you know, the kind of thing, right? Yes. Okay, yes, take it easy. Yeah. So stock market volatility, although is scary, although it is emotional, is harmless because over time it's like that. Okay, but if you go and watch it every day, go in front of a boss every day and watch him slap and kiss you, slap and kiss you, slap and kiss you, it's very painful, right? So don't go near his office. Yeah, just don't go near her office. Don't go near his office. Stay far away. Do your own work. Hand up work quickly, ciao. Same thing with stock market. 買個執嘅事, right? Very important strategy. Buy the 買個執嘅事. Just go on with your life. Yes. Okay. So in that sense, market volatility of the indices is quite harmless in the long while. So yes, it looks like scary, but in the long term, pretty harmless, huh? Okay, yes. Kena mood swing from boss quickly, siam now. Yes, okay. Now, oops, sorry. Okay. What is lethal? What is lethal? Means can die. It's an irreversible price crash. What is lethal? Is an irreversible price crash. Sorry, YouTube. I'm trying to correct it. Okay. A irreversible price crash means what, you know? Means it can go to zero or it can stay at some low price and never come back. 30 years ago, I bought a share called Pan United. $2. I borrowed money from my father, who is not a rich man. It's a primary school teacher. I told some of you, right? It crashed and crashed until today 30 cents. Saka. I waited for 30 years. Some people say, oh, you crash, you wait, you'll come back. Rubbish. This is what I call irreversible price crash. Just fall and never come back again. It's called Are there many stocks like that? Many stocks are like that. Okay, I give another one. Swiber. You heard of Swiber?
No.
Okay.
Exactly.
Swiber is how popular, how famous is Swiber? Swiber every year during National Day parade for many years has filled a contingent. One contingent, you know. Why I know? Because I was once a Singtel contingent commander in National Day. They have actually a contingent of I don't know 40 people or something like that. They are one of the anchor company that makes Singapore proud. Swiber went from $1.20 now is left with I think it's almost kosong already. Okay, Swiber is jalan. You have Swiber. Ayo, siblings. I don't know. You also invested in Swiber, Kiki. Wow, how much you invested in it, man? Okay. Swiber is gone. It's gone. Irreversible. I'll give you another one. High Flux. High Flux. How can High Flux, such a great company, become kosong? Right? High Flux was such a great company. It went down, all the way to kosong, you know. Sembcorp Marine is another one. I actually put the slides, okay. Sembcorp Marine went all the way down. It will never see the light of day again. These are called irreversible price crash. My goodness. Any one of you got these stocks? Okay. These are irreversible price crash. How? Yeah, high flux, yes. Noble, yeah. Noble is another one, suspended. You know how many stocks in Singapore have been suspended? It went down and never come back again. That's a lot of shares, right? So There's a big one that is coming, looming, is China Evergrande. China Evergrande is very, very bad. Yeah, okay. Yeah, very sway. Okay, the word explain, yes. Okay, so bottom line is that you're not afraid of volatility. You're afraid of this kind of crash, low like and what is worse is that they drop down from a human become zombie and never come back again. Then below a zombie, every day looking at you like that. You sell also die, don't sell also die. This is called walking dead. Yeah, okay. So what you are afraid in a market crash is to kena the irreversible price crash and not market volatility. I want to differentiate the two, okay? This is a very, very important thing. You want to avoid irreversible price crash, but you can't and probably don't need to avoid market volatility. The only thing you can avoid market volatility is just don't invest. Then you don't get the downside, but you don't get upside. Okay? Yes. So, you understand the two risks right now? I want to categorize the two risks so that you understand which one are you exposed to. If you are exposed to the market volatility, not so bad. But you're exposed to price.
Sorry. Wait.
If you are exposed to irreversible price crash, then you are very serious. Okay, you gotta ask yourself, which risk are you exposed to right now? Which risk are you exposed to right now? Okay, so in that sense, where I want to highlight is this. Okay, I talked about this many times already. The S&P 500. Okay, the S&P 500 and some of the broad-based index. Okay, has survived through the test of difficult time. Yes, it has got volatility, and the volatility is like a moody boss. Can make you very uncomfortable day to day, but is in some sense harmless if you wait long enough. Okay, in some sense it's harmless if you wait long enough. So not so bad. Okay, so then really the question is, if we know that over time this broad-based index will always go up, yes, it has got volatility go up, that begs the question why a lot of people backside EG go and pick individual stocks and expose yourself to what I call lethality risk. That means the share can crash and never come back on. The only way you can avoid lethality risk is to not pick individual stock. Yeah, because when you pick individual stocks, you will always expose yourself to this risk. Okay, how on earth I will ever know that Alibaba so big? Okay, this will kena a policy risk. How I ever know that Jack Ma, his mouth say something and anger the Chinese government? How I know this kind of thing happen is very difficult to predict. But when you buy a broad-based index, the risk of that is because it's spread across hundreds of stocks. Therefore, you don't get yourself this risk. You're right. Many people like fast returns. That's one of the reasons why. Okay, when you want fast return, you kena yourself to this risk. I already said it. Can you lend me a calculator, please?
What?
Lend me a calculator. Okay. If you invest in something that give you 10, 12, 15% return, okay, 10, 12, 15% return, over time you become a phenomenally rich. Okay, let's say in between 1.12, 12% return, S&P 500, Nasdaq, depend how you split it, 12% return. Okay, you type 1.12, 2 years, 3 years, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. In 30 years, you grow by 30 times. I put 1 million, become 30 million. What 30 million? Don't say 30 million. Even 5 million already. Yeah. Then why are you going to expose yourself? Pick this stock, because you want to be rich fast. The other way, alternative I give you, is to be rich, slow but steady and peaceful, and you can sleep every night. How many people now who pick individual stocks now outside already? Yep. Okay. Let me reiterate this. You want to avoid lethality risk, okay? And how you handle your emotions when in terms of price volatility is to go back to my Kueh Lapis investment structure. Form a financial safety net first. I say until I twin already, okay? Form a financial safety net first. 1M65, go top it up first. I don't know how many people wrote to me and said that. A lot of people wrote to me and said, Mr. Lu, in fact, I just got one email, I think this morning, yesterday. Mr. Lu, I've been following you. I'm a great fan of you, blah, 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 blah. And I would like to ask you, is it time to buy? Is it time to sell? What do you think of my share? Then I asked him, have you thought of CPF? Have you started on a 165 journey? Oh, no, I haven't. These are reasons why I haven't. Yeah, right? If you have done this, then the market volatility isn't that unbearable. Is it still unbearable? Will it still hurt? Of course. It's human, right? You go up, down, 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 but you go up, down, down, but you don't feel so bad because you know that wave come, wave go, these few weeks, you know how much money I lost or not? From the peak. Do you see me sad or not? I'm very excited talking to you, right? Yesterday I was jumping up and down from chocolate high, okay? And today I was sharing about weight loss and all this kind of thing. Why, you think I robot, is it? No, I'm very excitable. It's because the financial safety net there formed already. One big win sweep across, wipe out everything, still got a few $1 million in CPF. Recently there's a photo that's running around, in the light of an OCBC scam, right? There's a photo that come out and just say that the CPF must be your best bank, right? The scammers cannot get it. Your wife cannot get it. Your mistress cannot get it. Even yourself cannot get it, right? Rock hard, solid bank, right? Growing at 2.5 to 5% or 6%. How to fight? This is a rock solid financial safety net that I've been preaching and sharing with everybody. Okay, if you were to be able to do it, okay, then all this price volatility will already. But if you can put a financial safety net, then you straight away jump into picking stocks, pick Shopify, pick PayPal, pick, I don't know, Netflix, all this. Today the share will go by half. I don't think you feel very comfortable. Okay? Yes. The most important slide I want to end is this. Okay? Which risk are you bearing right now? Which risk are you bearing right now? Are you bearing a price volatility risk, or are you bearing a lethality risk? Okay, irreversible price crash risk, lethality risk. Which risk are you having right now? Okay, if you're having the more lethal one, you maybe not be able to sleep. When a price crash, I don't even think I can sleep, man. If I go and buy all those shares, yeah. Okay, cool. This is something I want everybody to take note. Okay, now so the question right now is that, market crash, now what should I buy? So for those people who can stomach it and you have only got price volatility risk, I cannot tell you what you should do, but what I'll do, right? When a dip comes, I buy. Dip comes, I buy. Dip comes, I buy. Okay, it's very enjoyable to buy when it's crashing. Okay, maybe a bit scary, but your price volatility risk only very unlikely whole S&P 500 and the kind of thing. Okay, cool. All right. Okay, questions. Okay, I hope you find this useful. Questions. Okay, bear in mind this one. Which risk are you having right now? Ask yourself, which risk are you having right now? Okay, let's take some Q&A, shall we? Okay. Mr. Lu, do you foresee a market going down? I foresee the market having this big fluctuation. I cannot tell whether it will go down further or whatsoever. Okay, but you know what I'll do? Whenever I see opportunistically the market going down, I'll buy a bit, I buy a bit, I buy a bit. Okay, I cannot tell you what you should do. Okay, Dandelion, whether is the dip now worthwhile to buy or we should further for the dip. No, I think I shared before. What I would do is I cut my buckets into two. One is I do dollar cost averaging, go up and down, also buy. The other one is that when there's a big market dip, generally, okay, 15, 20, 30% the kind, I whack down big time. Okay, I would suggest for myself to nibble in right now rather than to whack big time because it's not big enough. Okay, for myself. Yes, you can never catch the lowest point, nor can you catch the highest point. You're right. Okay. What's the difference with S&P 500 and S&P 500 ETF? S&P 500 is the index. S&P ETF is the one you can buy and sell. Okay. Can you share with me when I buy? I cannot, because I already tell you I will buy. Okay. I cannot tell you specifically the moment I'll buy because that I can get in trouble with MAS. Okay. CPF advisable to use for robo investor like Endowers. Again, I cannot ask you, but Endowers is the only one that you can buy the S&P 500 with using a CPF. I was told by one of our followers that and once you quote Mr. Lu's name or 1M65, they give you a discount, you know, some $30-something, or they waive the fees or something like that. Yeah, very good. Okay, I must go and thank the CEO and the Chief Investment Officer. Will I ever run out of dry powder? Of course. Where got people dry powder? So you must phase out your dry powder in that sense. Okay. So we see the S&P 500 price is the index or the ETF price. You should always look at the ETF price. Okay, ETF price. Yes, I quote Mr. Lu's name. Jess, did they give you a discount or give you some better service or something like that? Okay, I don't know. I've never. I don't know because I can't quote my own name, right? Yes, I got $30+ when I mentioned your name. Well done, man. Okay, you got discount. Okay, what? You should do it too.
Yeah, I should do it too.
Yeah. Okay. Yes, you got $30 discount. Please thank me. Okay. Nibble in terms of 50K or less. Depends on each individual. Some people they only have 50K, right? So they might break it up. Is it wise to exit from individual stock and enter SPY instead, which is S&P 500? I cannot tell what you should do, but I can tell you that having individual stocks is very risky. Yeah, okay, I will just say this, very risky. Okay, which S&P 500 ETF do I invest in? I can tell you the CPF one I use and because that's the only one. The rest of it, you know, there are many options out there. Go pick your own. Okay, where can I see your Kueh Lapis video? I think I have them in my 1M65. Can you please load up my code, please? What is it called?
1M65YT.
Okay, everybody, go to my YouTube channel, 1M65YT+1. 1M65YT+1. Click follow. For every video they watch, please click a like, okay? Please do that. Can you please do that? Yeah. Can you tell me about NASDAQ? So NASDAQ is the index that generally takes care of, has a collection of, I think, 100 high-tech companies. Okay, it's more volatile, more upside, but hugely volatile. Not when we cut, you cannot do it. I don't have advice +1. You know, people come up with very funny quotes on 1M65YT+1. Okay, 1M65YT+1. Please click follow and watch the videos. Okay? What's the difference between Lion Global Infinity 500 and buy SPY? Lion Global Infinity is a unit trust kind of thing. SPY is an ETF. One fee is generally higher than the other. I don't know exact fee, but the Lion Global one is the one that Endowers enable it for you to buy with your CPF. I missed the question. When I miss the question, please, I just joined. Is your YouTube? Is on your YouTube later. I'll try to put this on. The YouTube is now. There are 131 people watching on the YouTube right now. The video is there. Okay. How much dry powder do I still have? Well, I mean, I gotta tell you how much money I have. Chair. Okay. 186 YT plus 1. Okay. Yes, 186 YT plus 1. My YouTube channel, please go and click follow. Turn on notification so that you get alert whenever I've got videos going up, because you may not watch this channel every day, right? Next question, guys. I think everybody is busy doing 165 YT plus 1. Okay, the slides are under crash plus 1. Yes. For those people who came in late, yes, you missed the Tory Birch. It's all under TB plus 1. Okay. The quantities are a bit limited because I think only 2 or 3 pieces only each. Yeah. So you go there. That's a commercial for for premium more. Any last? Is it better to use CPF invest or use cash? I generally I give you the pros and cons. Cash is good. So cash is good because the interest rate is very low, but cash is very liquid and you can buy a lot more things. CPF you can buy a lot less item, but CPF the interest rate is very high. So in that sense, there are pros and cons. Very difficult to decide. Do you think you'll drop to, just say, Mr. Lu, do you think you'll drop to 20% or more into a bear market region? Hard to say. Personally, I don't think so. That's my opinion, because all the risks that we're seeing now are anticipated risks. Generally, when you go 20% or more for the S&P 500, we usually are in unanticipated risk. Okay, yes, but individual stocks can lousy a lot more. I actually think so. Okay, how many percent of your dry powder will I use for currency? Depend how far it drop. If you drop to 50%, I whack everything down. But that's just me. Okay. Where is SG economy headed to? I think Singapore economy is right now having a big rebound, huge rebound. Okay, huge rebound, and I think. But wait, economy and stock market don't go in the same direction, one. Okay, don't necessarily go in the same. In the long run, it will, but in a short run, it can go in different direction. So asking about economy question not very useful for stock market. What is the framework of nibbling? Oh goodness, what's the framework of nibbling into a stock market? Drop 10%, invest XX%. It's very difficult. It's very, I said nibbling means putting money in that you won't, if lose it all, you won't feel bad, or you won't lose sleep. You will feel bad, but you won't lose sleep. Okay, just nibble a little bit here and there. I actually think that's a good way of describing. Is the interest rate moving up? If yes, do you think it's good to refinance my property loan right now and select fixed rate? I suspect the interest rate already captured this in Singapore, but I cannot tell the Singapore market interest rate. I can tell the US one. Okay, so the US one is definitely going to rise. It's already announced. It's fact already. Okay, unless there's another big crash. But strangely enough, the China Central Bank has lowered their interest rate. Okay, has lowered their interest rate because the economy of China is really shit. Mr. Lu, for someone who is 25, do you think he should invest in S&P 500 at his age? And if how much of the number should you look at? I think the younger you are, time and compounding is in your favor. Okay, if I'm you, unfortunately at 25 years old, no one taught me, so I didn't invest. Now in hindsight, I would have done it for myself. Okay, now how much you put in really depends on how much spare ammo you have and things like that. Put in something that if you lose it all, you won't feel. If you lose it, you won't feel. You won't lose sleep over. Okay. The Lion Global Fund is not as liquid and tradable as SPY. Yes, it takes a few days to trade, but your time horizon for investing in stocks should be in decades. So 1-2 days of delay shouldn't make much difference. Any comment or type of risk for Tesla, AMD, Moderna, and C? They are exactly the irreversible price crash risk. Okay, they are the kind of risk that individual stock all carry the risk, and this tech stock carry the risk even more. Shopee is damn big, right? But Shopee is bleeding like crazy. Fortunately, they have a huge cash stash right now. I think $11 billion or something like that. So not so bad. Okay, let's hope they will fund premium more. But But Moderna, how to say, AMD, how to say, Tesla, how to say, but they all carry the risk. Okay, they all carry a risk. Yep, they all carry the risk. Okay. Any more questions? Yep, any more questions? Okay. So really the rule of the main lesson for today is we are now in a highly volatile market experiencing quite a serious dip. Which risk are you exposed to now? Always always make sure you have less of the irreversible price risk, the lethality risk. That means can go lethal on. You should accept more price volatility risk, okay? And last is that to fight the volatility risk, make sure you build a firm foundation of financial safety net. How about 50 years old getting an S&P 500? If you want, do very small amount. As you grow older, put less and less. Okay? Do you buy S&P 500 in US or SGD market? I buy in both. Okay? Big crash for C since then. It was, I think, gone up a little bit. At one point in time, it went down 58%. Mr. Lu, you always show compound interest for 30 years. Does it mean that if we want to hold for 10 to 15 years, it's not recommended? It depends on what item. S&P 500 generally recommended at least 10, 20, 30 years, okay? For your SA, 10 years doesn't go very much. The dip, the turn comes in your 15 to 30 years, okay? So don't buy individual stocks, only index. I cannot tell you what you should do. That's what I do, okay? Some say good time to buy Tesla and see since price dropped down so much. Then you expose yourself to price lethality risk. Okay, it's okay. You may be right. You may make a endowers doesn't tell you what I want. Yeah, dollar something like that. Yeah. Oh, it's kind of crisis, serious crisis.